Welcome to GhanaTalksBusiness.com and to our retirement planning tips. Today we are looking at the second tier and the part it plays in your pension provision. The second tier is contributed by the employee only. At the end of every payment period, 5.5% of the basic salary before tax is deducted from the employee's salary. This forms part of a mandatory 18.5%, which is paid between the employee and the employer. So we have the employer paying 13% to make up for the 18.5%. 5% out of this whole lot is now put into the second tier, and that is what we are actually focusing on today. This is managed by private trustees. What it means is that a 13.5% remaining goes into the first tier, and we have a detailed video for that, which you can always refer to. What are the features of the second tier? The second tier, number one, is mandatory for all formal sector employees. There's no maximum age limit, but a minimum age of 15 years, which means you can contribute, no matter how old you are, into the second tier. And then it's a defined contribution, which means that at any point in time or at the end of your retirement, the final value or value at any point in time is going to be the total contributions you've made plus the investment returns less all scheme charges. That is what it means by defined contribution scheme, and which means that this actually depends on the performance of your fund. So it's very important that the service providers do a good job for you and for you also to keep an eye on it. What are the benefits of the second tier? It gives you a lump sum. Remember that SNIT no longer pays lump sum under the Act 766. You can use this the proceeds of the second tier to also secure your primary resident mortgage if this is the option you actually choose. It's also a death in service benefit, which could be paid to the beneficiaries. Should one pass on, one die in the course of service, it becomes a benefit for the survivors. And that is why it's very important for one to always update their benefit nomination forms. Once you receive this lump sum, there's an option for one to buy an annuity to enhance their monthly or quarterly pensions. For example, if they are already receiving something from SNIT, then once you buy this insurance product, you'll be guaranteed some amount of money to be paid regularly on top of what you receive from SNIT. Secondly, you could also invest this amount in some kind of business. Only have to be cautious of some risk that these businesses face. There are a lot of stories about this, and it can really be disastrous if this happens. What are your responsibilities? One major focus of this whole retirement planning session is to alert contributors or people of their responsibilities in planning for their retirement. On the second tier, as we've already said that this is a defined contribution scheme and depends on the scheme performance, it is very important that you keep an eye on your contributions. Be conscious of it and also on the scheme performance. Your employer is supposed to remit. The question is, are they remitting? Are your contributions up to date? Are the scheme fund managers doing well? Are the trustees also keeping an eye on it? These are your responsibilities. And so what you do is to check your statements as well to make sure that you are up to date yourself. And please, if there's anything you don't understand about your scheme, do ask the relevant questions. This is how you take charge of your own retirement. Thanks for watching this here on GhanaTalksBusiness.com. The number is here. You can always call if you need any more explanations. Also, feel free to book a retirement knowledge session for your staff. Thanks for being a part of this. I'll come your way again.